Welcome back to Investing Talk Podcast.
Today we're looking at Baidu.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so the story here is really about a massive, massive transformation. We're talking about a company that, a few years ago was seen as just a search engine.
An old school internet player. But that's just not the case anymore. What we're seeing in the Q3 2025 financials, it's a completely different company.
And when you say different, you mean the actual revenue streams have shifted.
Oh, fundamentally. The proof is pretty stark. You look at AI cloud first.
Right.
That segment showed a solid 21% year-over-year revenue increase. It's now at what? RMB 6.2 billion.
Which is solid growth, but that's not the headline number that really jumps out, is it?
No, not at all. The real shocker is the AI native marketing services.
What was that figure again?
It was an astounding 262% growth in that segment.
Wow. And explain what that is, because it's not just regular search ads, right?
Exactly. This isn't just about clicks anymore. This is them using their large language model, ERNIE, to basically automate and hyper-personalize entire marketing campaigns for their clients.
So it's a much stickier, higher value service.
A completely different business model, and it's becoming a huge piece of the pie. It's now, 18% of Baidu Core's total online marketing revenue.
And that's critical because at the same time, the old legacy business.
The legacy business is declining. The traditional online marketing saw an 18% drop. So you see this perfect swap happening.
The new AI growth isn't just extra, it's actively replacing the old model.
It's transforming the company's entire foundation from the ground up.
So the big question then is, can they keep it up? I mean, what are analysts projecting for, say, the cloud business going forward?
The street is very confident. Projections are showing cloud revenue growth could even accelerate to 61% in 2026.
And that's all tied to ERNIE.
It's all tied to the adoption of the ERNIE Foundation model. The bet is that as more companies use ERNIE, they will have to use Baidu's cloud infrastructure to run it.
So you get locked into their whole ecosystem.
Precisely. A full-stack, scalable AI play.
Okay, but a transition like that costs a fortune. R&D, data centers. How's the balance sheet holding up? Is it stable?
It's robust. I mean, they have very strong cash reserves, but more importantly, they are generating a ton of free cash flow.
And that FCF is the engine for all this.
It's the lifeblood. And it tells you they aren't just, burning through cash. They're funding this growth from ongoing operations, and they are plowing all of it back into the business.
So no big buybacks or dividends right now. It's all about growth.
All about multi-year growth, and that capital is going into two main areas.
Which are?
The AI cloud expansion, of course, building out that infrastructure, and the Apollo Go autonomous driving platform.
Let's talk about Apollo Go, because I think a lot of people just see it as, a robotaxi service. But it's so much more than that, isn't it?
Oh, it's absolutely essential. You can almost think of Apollo Go as their most valuable data factory.
A data factory? How so?
Well, every single mile one of those cars drives, every traffic scenario it navigates, that's all incredibly rich, real-world data that gets fed right back into the system.
To train the core AI models.
Exactly. It makes ERNIE smarter. It makes the cloud platform better. It's a self-improving feedback loop.
Which creates a powerful competitive moat. So that brings us to the big question. How do they stack up against the other giants? Everyone's doing AI.
Their advantage is all about integration. It's not one thing. It's a three-part ecosystem that works together.
Okay, break that down for us.
So first, you have the ERNIE model itself. Second, you have the AI cloud that's built specifically to run it. And third, you have that data engine we just talked about, Apollo Go.
And here's where it gets really interesting, right?
Okay.
Because when you have all three, you're not just selling a product.
You're creating incredibly high switching costs. If your company builds its whole workflow on ERNIE running on Baidu's cloud, moving somewhere else is almost impossible.
It's a technological lock-in.
It is. Plus, you get all this proprietary IP, these powerful network effects. The more people use it, the better it gets for everyone.
It's like they built the power plant, the transmission lines, and the city all at once.
That is a perfect analogy. And it seems to be working. Their execution in cloud and autonomous driving looks superior to some peers who maybe have their capital spread a little more thinly across different bets.
That focus seems to be paying off in the market, too. So let's talk about the technicals. Is the stock price actually reflecting this bullish story?
It definitely is. The price action has been very strong. We just saw a bullish extension, climbed about 4.39% to around the $132 mark.
But what about year to date?
Year to date has been really impressive, a 57.70% gain. That's, significantly outperforming the S&P 500. It shows a real re-rating is underway.
So the market is buying the AI story.
It seems so. The moving averages are all aligned constructively. It looks healthy.
But after a 57% run-up, where do analysts see potential entry points for someone just looking at this now?
Well, right now the stock looks to be in a bit of an accumulation phase, kind of consolidating those gains. Analysts have pointed to a support zone somewhere near $124.80 to $126.81.
So a pullback to that area could be seen as an opportunity.
Exactly. Assuming the long-term story remains intact, that would be viewed as a pretty attractive zone.
Let's talk about conviction. Are the big institutions, the analysts, are they all in on this?
The conviction level is very high. The immediate sentiment is predominantly bullish, but it's not just talk. It's backed up by some pretty aggressive price targets.
What do we talk about target-wise?
Well, you have JP Morgan at 180 or later, Citi has a $181 target, and Jefferies is also at $181.
So they all see significant upside from here, more than 20%.
That's right. And it's all based on the monetization of that AI cloud and all the value that's still sort of locked up in their other units.
And are the big funds actually buying? Is institutional money flowing in?
Oh, yeah, they're accumulating. We're seeing some notable buys. West End Capital Management, for instance, picked up over 75,000 shares.
Good.
Voya Investment Management added more than 15,000. And even Cathie Wood's ARK funds have been buying in, grabbing over 51,000 shares. So, yes, the institutional confidence is there.
All right, so let's look ahead. We have the fundamentals, we have the momentum. What are the near-term catalysts? What should people be watching for over the next few months?
The most immediate one is the Q4 2025 earnings report. That's coming up early in 2026.
And the market will be looking for what? Continued AI cloud growth.
Exactly. Continued acceleration there. And also, signs that the decline in the traditional ad business is starting to bottom out. Beyond that, you're looking for product news.
Like upgrades to Ernie.
Specifically Ernie 5.0 and any concrete news on the global expansion of Apollo Go.
Now, that's the confirmed stuff. Let's get to the speculation. Are there any big rumors out there that could really move the needle if they turn out to be true?
There are two big ones. And the first one is probably the most important for unlocking value.
Then that is?
The rumored IPO of their Kunlunxen AI chip unit.
Okay, explain that. What is Kunlunxen, and why would an IPO be such a big deal?
So Kunlunxen is their in-house, custom-designed AI chip. It's the hardware they built to run their own AI models efficiently so they don't have to rely on third parties.
So it's a huge strategic asset.
A huge asset. And an IPO would put a specific multi-billion-dollar valuation on it that, frankly, isn't fully reflected in Baidu's current stock price. The rumor is that could happen as soon as Q1 2026.
Which would be a massive value unlock for shareholders.
A huge unlock. And it would give them a ton of capital for R&D.
What's the second big rumor?
Global expansion for Apollo Go. There's been talk about pilot programs in Australia, Southeast Asia, but the really interesting part is rumored talks in the UK.
For what?
Potential deals with major ride-sharing partners. Think Uber or Lyft. If they can deploy their driverless tech on a platform like that, the addressable market just explodes.
That's a powerful bull case. But we have to be balanced. What's the bear case? What could derail all this?
The number one risk, without a doubt, is geopolitical tension. It always is with a major Chinese tech company.
Right.
For example, back in November 2025, there was just a rumor of a Pentagon list probe, and the stock dropped over 1.3% immediately. That risk is just always there.
So it's an external factor you can't really control. What about internal risks? Any red flags like insider selling?
There was a recent notice of some insider selling, yes, about 50,000 ADS. It's something you always have to watch.
Of course.
But, in the grand scheme of things, it's a relatively small amount compared to the heavy institutional buying we're seeing. It hasn't really changed the overall consensus.
So when you weigh it all up, the incredible growth story versus this constant geopolitical risk, what's the takeaway?
The takeaway seems to be that a lot of that risk is already priced in. The market understands the volatility that comes with the territory. What's allowing Baidu to outperform is its unique AI story.
It's not just another big Chinese internet stock anymore.
Exactly. It's a specific high-conviction play on foundational AI. And that strong ecosystem, the Ernie Cloud Apollo trio, is acting as a real defensive moat.
So the final thesis is pretty clear. Baidu has pulled off this pivot. It's a validated AI powerhouse with strong financials and institutional backing.
Hmm.
It really seems positioned as a long-term, multi-year hold.
Absolutely, especially with those potential 2026 catalysts on the horizon.
You know, the real key to watch over the next few months, if you're trying to understand the potential here, isn't just the Q4 earnings.
Mm.
It's the timeline and, crucially, the potential valuation of that rumored Kunlunsen IPO. That's the event that could unlock a massive amount of value that the market isn't fully pricing in yet.
It creates a really fascinating risk-reward setup.
If you want to keep up with how those catalysts develop, make sure you subscribe and stay tuned. We'll see you next time.